Greetings, Ted Hicks, founder, CEO, and Chief Investment Officer for Hicks & Associates Wealth Management. Today's Tuesday, January 18th. Market closed a little while ago. Pretty rough day there. I'll talk about that briefly in just a second, but want to give a little bit of a tease on some of the things that we're going to be talking about at next Friday's State of the Union webinar. Again, that webinar is going to be on Friday, January 28th at noon, and it is open to all who are interested. You do not need to be a client in order to join us. So you're more than welcome to register. You can watch us talk about the markets and the economy while you're eating your lunch at your desk. One of the things we will discuss is inflation. We've been talking about inflation all year, and recent data suggests that we're likely going to be talking about this for a while longer. So the Bureau of Labor Statistics just recently released the data for 2021, and you can see all items comes in at about 7%. They also release what they call their core data. The core CPI comes in at 5.5. Now, what is core? Core data or core CPI is all items less food and energy. And count me as one that is a little perplexed why we report on that, because I think all of us use food and energy every day. But nonetheless, they report core inflation as 5.5. The reality of what we really want to highlight right now is look at some of these figures in the energy department. So we've got all energy up about 29% year over year. Energy, the commodities, almost 49%. Gasoline, pushing 50%. Then look at new vehicles up 11 or almost 12%, and used cars and trucks even higher. Folks, that is a lesson right there in supply and demand, because there's a supply problem with some of the new cars, and so all the demand is being pushed over into used cars, and that is pushing up the prices of used cars even further. Matter of fact, we just looked up the value of our truck, and I think it's now worth more than I paid for it. So most of us are experiencing inflation. You're going to continue to experience inflation. We will be talking about this during our State of the Union webinar. One of the things we will also talk about is shelter. Shelter is up 4.1%. That's a little misleading. We're going to talk about that and some of what we refer to as the hedonic adjustments that are used in making these statistics. So we'll talk about that at our webinar. But let's talk about the stock market. Stock market today, the overall S&P 500 is what we're going to be looking at. We're going to be doing that by looking at SPY, which is an ETF that mirrors the S&P 500. It's not a perfect mirror, but it does give us a way to talk about the S&P 500 in the middle of the day before the indexes have updated finally for the trading session. So right now we're down about 5% off of the high. So whenever we start to see a little bit of a correction, there's always a concern. Is this just a minor correction, or is this the beginning of a bear market? Well, the reality is nobody knows for sure. But one of the things that we can tell you is that typically speaking, when we're off 5% from the high, that's not something that's too alarming. What does begin to concern us is when we see a number of closes below the 50-day moving average. This red line is the 50-day exponential moving average. So it's the moving average for the last 50 days, and 50 days in the stock market is approximately 2 months, because again, we're talking about trading days. So the fact that we're off 5% from the high, not too concerning, but what I don't like to see is the fact that we're now 3 days close below this 50-day average. That's not necessarily a good sign. Now, whenever that happens, people tend to be tempted to go what we call bottom fishing, meaning buying a stock when it's at the low. The problem is you don't know if a recent low is the low. Okay, this particular stock on the screen right now is a stock that was very popular during what we'll call the COVID economy. You can see, and this is 2020 right here, it ran up phenomenally, and it began to taper off a little bit, and then it fell below that 50-day line, the same metric that we were just looking at on the S&P 500, fell below that line, and then you can see where it's at now. So is this stock at the low? Well, it's at a low, but right now you can see it's trading at about $30 a share. Does that mean you should buy this stock because it's going to rally? There's no way to know that. And there's also no way to know this stock could very easily start trading at $20 a share, $15 a share, $10 a share. There's no telling how low it can go. We know it can go to zero. Okay, that's on an individual stock. So the same token, this is a stock that went public, looks like October of last year, had a nice rally and since has started to correct, and now it's trading right about the same price. So it's getting really close to the same price it was when it went public. So should you buy something like this? Now, this stock that's on the screen now, and as well as the last one, I'm specifically not mentioning the ticker symbols because I want to make sure nobody knows. I'm not making any recommendations here. And the bottom line is we don't know when a stock is going to turn around, if it ever turns around. So if you're thinking about buying something just because it is low, if you're talking about an individual stock, we can make an argument that's different with a mutual fund or a sector ETF or something like that. You could make an argument. But with an individual stock, you really have no way of knowing if it's going to go any lower. This stock on the screen is trading at $27 a share. It could easily get cut in half again. So all that said, if you would like to join us for our State of the Union webinar, just navigate over to hicks-associates.com. You will see a blog post right here, State of the Union webinar, and just click that button. You'll get a pop-up, or the next page will look like this, and then just click on that button at the bottom of the screen where you can please register there. That will then kick you over to our GoToMeeting or GoToWebinar site, where you just need to enter your name and your email address and you will be registered for our website. So again, it's going to be Friday, January 28th at 12 noon. We certainly hope you will join us. And if you have any questions in advance of that, feel free to email them to us. You can see my email is on the screen. That way we can make sure that we answer your questions during the webinar. We will take Q&A during the session as well. So again, hope you found this helpful, and we hope you will join us next Friday, January 28th at 12 noon. Have a good day.